Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond at the Contrarian Trader, and it is March the 8th, 5:10 a.m. Eastern Standard Time in the a.m. So as usual, what we're going to do is we're going to kick things off with how the pre-market activity is looking with the U.S. markets, both equity and currency, and maybe we'll dabble a little bit in commodities. And then we'll segue into our members' stock chart request. This is where our members submit symbols for me to review on video. Let's kick things off with a look at the US dollar. Now, last night on Market Wrap, we were talking about the daily chart and the 1 hour chart. And the 1 hour chart was on Thinkorswim. And we were in this consolidation. And I warned that I was concerned about a breakout on the dollar, and sure enough, overnight, we got the breakout. Now, why do I view that as negative? It's because we do have a couple of commodity positions, not a couple, a few commodity positions on, and this short-term strength in the U.S. dollar will obviously pressure those positions. But the higher level view of the dollar is that it is in a downtrend. When you look at a weekly and or daily chart, it's clearly in a downtrend, whereas the euro, while it has weakened up here, remains in an uptrend on a weekly basis, as does the Japanese yen on a weekly basis. But both the euro and the yen have paused here, allowing the dollar to rally some. Now, the dollar is concerning to me in that we have every reason in the world to go down, whether it be weak economic data or whether it be turmoil in Washington, D.C., the great unknown of tariffs or no tariffs, and who will they impact. Also, the renegotiation of trade deals. Will there be a response by our European and Asian trade partners? Those are the great unknowns. Now, I can speculate why I believe that the dollar is showing strength. It's because while the talking heads on CNBC and Bloomberg, all they'll look at are the tariffs. They're not looking at why the tariffs are even on the table right now. They're being used, in my own opinion, as a club to try to renegotiate new trade deals, better trade deals. Yet, as typical with the financial media elite, what they'll do is they'll focus on one individual story and not pay attention to the higher level view. It's because they have the lack of intellectual integrity to give the president any bit of credit on this topic. In short, all they're looking to do is look for the trees rather than look at the forest. And the markets may just be, I'm using a may here, because the dollar remains in a downtrend. I can't call a bottom on the U.S. dollar based upon a 1 hour chart, right? That would be amateurish. But short-term strength may just be due to the anticipation of a better trade deal, which is why you're not seeing the markets break down in earnest as well. Keep in mind that we rallied well off the lows yesterday, and the Russell 2000, it closed higher. Now, while the currency picture is a bit mixed, commodities are under weakness. Oil, back to the 4 hour chart, oil is putting in lower highs and lower lows. Now, this is a 4 hour chart, very short term, and it can trade on a dime. We're in a trading channel right now. Now, if we take out this low here, last seen yesterday, we'll probably come back down and retest this lower band of support last seen on the 2nd. Now, taking a look at gold. Gold was higher earlier. It is now pulled back with the rising U.S. dollar. Now, seasonally, gold should be ripping right now along with the gold miners. It is not. It is lethargic. And the gold miners are underperforming the price of gold. So given the economic news that's been coming out of late, I would expect to see weakness in the bond market and in the U.S. dollar. And the weakness in the bond market would drive yields higher, therefore drive the market lower. We're not getting that right now. And now, when do we know that gold is off to a new bull run? We need to get through a lot of overhead supply, and a close above 1365 would get me very, very excited about being long of gold. Because if we break through 1365, we're going to be at 1400 in a heartbeat. Let's take a look at the U.S. futures market, the NASDAQ 100. We are putting in higher lows and now higher highs on the day. Now, keep in mind that tomorrow we have non-farm payrolls which are coming out. They are a market mover. Also, keep in mind that while we are stair-stepping higher here on a 4-hour chart, the higher level view is that we have a head and shoulders setup forming. Left shoulder, head, right shoulder. Here's our neckline here. Now, just because we're making this observation doesn't mean it's going to occur. We don't trade off of what we're seeing right now, meaning the possibility of a head and shoulders break. No, you don't want to do that. That's amateurish. What you want to do is you want to wait for the break of support, whether it be an opening position on a break below this support level here, very small opening position, and then add on breaks of these support levels and then get more aggressive on a break and a close below the neckline. That's how you'd make that play. You would lean into the position, scale into the position. This is what I always teach members. Now, the S&P futures, very similar head and shoulders setup here. I won't repeat it, but we are stair-stepping higher. No new daily high yet on the S&P futures. We're up slightly. So to sum it all up, it looks as though we have a flat opening for the U.S. futures market with a bias to the upside. Keep in mind that there's not a lot of economic data coming out today, but tomorrow, the Pimp Mac daddy of them all, non-farm payrolls. Let's get to member stock chart request. The first chart up is Kroger. Here's what I had to say about Kroger back in November. We had begun watching it a couple of weeks earlier. Then I did a follow-up video after the breakout on Kroger because we were bullish on it. Here's what I had to say.
Kroger, back to the weekly chart. We had a down week last week, no new weekly high. So it looks as though we're going to pull back and we're going to consolidate here on Kroger. Now, seasonality for the month of November since 2013, it's traded higher 60% of the time. For the month of December, 75% of the time. So given the seasonality effect, it looks as though we still have the wind at our backs on Kroger. The path of least resistance remains higher. Daily chart. All right, so on a daily chart, we have some overhead supply here. Buyers back here, they want their money back. We had a bearish key reversal on Friday, meaning that we traded higher, then reversed to close lower on the day. That tells me that in the very short term, we're going to get a pullback here. Let's put some lines up and I'll illustrate the current consolidation. All right, so we're in a triangle formation. If we break out above this upper band of resistance, thumbs up to a buy, assuming that the shares close above this upper band of resistance on a daily basis. Now, if we break down below this lower band of support, no way. You have to stop out of the trade if you're swing trading this. If you're an investor, then stick with it. You still have seasonality at your back for the month of December. Volume to the downside on Friday was very, very light. That favors bulls. So Kroger, short term, a little bit of weakness. Longer term, looks like it's going higher.
All right, so that video was recorded right here, the week of November the 20th. We did break out to a new weekly high, and it was off to the races. If you bought on that new weekly high, you made a large sum of money if you got out on this key reversal week. Now let's talk about whether or not I'd put on a trade now. The answer is no, not right now, because on a weekly basis, we're making lower highs and lower lows. And at current, we have flashed a bullish key reversal on the week. Today is Thursday, right? So we have a couple of trading days left to go. A lot can happen. So we want to keep an open mind. Daily chart. So yesterday, we broke down below the neckline of this head and shoulders setup. Left shoulder, head, right shoulder. Let's call 26.42 the neckline. Where do we close? 26.23. So the probability of lower lows is very good here. I think at a bare minimum will retest the support level here at 25.76, and there's a very strong chance that we come all the way back down here to fill the gap at, let's call it 24.29, which would also be a retest of prior resistance going back to August of 2017. At that support level, or what you would expect to be, let's update the chart. Okay, this is better. So you would expect this prior resistance level from back in August to now be a support level. Now, an overshoot on an intraday basis would fill the gap that opened up. If we reverse to close back above this support level, then I would entertain a buy of Kroger. But as it stands right now, it's simply a watch. Would I short it? No, I wouldn't short it. I mean, there's not enough reward for the risk that you'd have to accept. Volume yesterday was high, so the indicators are looking very weak. I think there's a strong chance that we come all the way back down here and retest support. The next chart up, Amazon. This week we broke out above resistance. One might argue that we did so last week, but in any event, we have rallied to a new weekly high. So we have a continuation breakout here. Amazon is a long. All the indicators are implying, with the exception of MACD, which is leveling off here a little bit, it's implying that they're implying that we're moving higher. Ultimate oscillator double bottom setup, hooking up higher. Now this is a weekly chart. The week isn't over yet. Let's go to a daily chart, drill down a bit. Yesterday on a daily basis, we had a bullish engulfing of the prior day's move. Very bullish setup. Stokes are rising, RSI is rising. Volume, though, a major concern here. Look at this. We are trending down. So what this implies to me is that we have computers, technical traders, and the retail investor bidding up Amazon. This is not institutional buying. So while I expect to see higher highs here on Amazon, a caution flag is definitely on the track with regards to volume. If you're going to momentum trade this, use a trailing stop loss. Let the market take you out. Deckers. I've spoken about Deckers quite a bit. I still like the chart. We've paused here. The real story is not on the daily chart. Let's be frank. With the exception of volume yesterday, it was very high to the downside. The story is not so much on the daily chart. The story is on the weekly chart. Far too many traders get wrapped up in the daily chart. The weekly chart tells a completely different story. What we want to see is a rally up and through 99.88. That sets the stage for a major bull run higher. So these shares can be bought on a close above. I think you could scratch the itch on a rally up and through 98.62, nibble. Then add more on a rally up and through 99.88. Buy strength. Volume this week, so far so good. It's above average. But we haven't broken out yet. What I want to do now is I want to discuss a symbol, MLSY, posted in the Facebook discussion group by one of our new members, Milan. And it looks as though his analysis is based upon a daily chart. So what we're going to do is we're going to pick out Milan's post here. Every once in a while, I like to go over the symbols that are posted in our Facebook discussion group. If you're not currently a member, please join up. So we will take a look at his stock, and he's got an open mind here. He understands that if the markets roll over, then the trade is off the table. But he's bullish using a short-term daily view. Let's go to the weekly and daily chart and discuss Milan's pick. What I always like to do, Milan, is take a look at the overall trend, and the trend is obviously down. Now, we have seen a bottom, a low of 55 cents. We put in a higher low at 61 cents and formed a nice base. That's good stuff. We are now in the tip of the spear. What does that mean? We're in a triangle formation. It's ever tightening. We're going to either break out or break down very soon. Now, we did break out the week of February the 20th. The problem is that while we did get a continuation move higher, we flashed a bearish key reversal and a breakout point failure, meaning it couldn't hold the breakout. And usually what occurs is that we retest the lower band of support, and there's a very, very good chance that it breaks. Now, that hasn't happened here. We've been holding support, and we don't have a new weekly low this week. So what that tells me is that you do have support. You have buyers back here willing to bid up the shares. So that is bullish, despite the fact that we had a bull trap the prior week. But what I would caution is that you focus more on the weekly chart rather than the daily chart, because there's a lot going on here, the least of which is that the weekly chart is capturing a good portion of the downtrend line, which is not reflected on the daily chart. So any significant breakout above resistance on the weekly chart should be applauded, because it is so much more significant than what you get on a daily chart. So I think you're correct in identifying that we have a stock that deserves to be watched. We'll come back to this chart in a moment. Now, taking a comparison look at the daily chart, you can see that the daily chart is far more noisy. While it captures the double bottom setup, the higher low that I just referenced on the weekly chart, it isn't giving you the higher level view, the long-term downtrend. So while we have resistance levels above, which could be considered as buy levels if you see a close above them, I would be looking more towards the $2.10 level as an entry level. Why is that? You really can't appreciate it on this chart because it's way too noisy. I need to go back to the weekly chart. The weekly chart would show that a breakout in the close above 208, 210 would have us out of the downtrend and into a new uptrend, because now we have put in higher lows and now higher highs. And you want to see that close on a closing basis. So let's try to step back and away from the daily chart and the price action. Let's focus more on the weekly chart action, and also take a look at what your catalyst is. You referenced it already. It looks as though you did some analysis that the volume relative to the float could push the shares higher. Good stuff. What else? Are there a large number of shorts waiting to get squeezed, etc.? So I think that you have a good speculative trade here, but let's keep in mind that the higher level view has the shares in a downtrend. I would defer to a weekly chart rather than the daily chart to time my buys, because I would want to see a rally up and through this resistance here on a closing basis before I got aggressively long. Netflix, weekly chart. I got to tell you, I subscribe to Netflix. I don't get it. I mean, sometimes they have good movies on. Most of it's old. A lot of it's B-rated movies. I just don't get it. I think that Amazon Prime is a fierce competitor to Netflix, but my opinion is worth zero, because the charts are telling us this is a stock that wants to move higher. The path of least resistance is no doubt up. Volume this week is already well above the moving average and above last week's up volume. So assuming that we close out the week up, it's a very strong week. Daily chart, we pulled back yesterday. I think that it's the pause that refreshes. The path of least resistance remains higher. Volume was big yesterday, so I would buy the breakout. Let's drill down to a 2-hour chart. Yeah, I think we're moving higher here. Stokes are trying to hook back up. We rallied off the lows of the day yesterday into the close, and we did so on volume. So I think Netflix continues to move higher here in the short term anyway. And that's it for this morning, folks. Everybody have a profitable trading day. If you watch this on YouTube, please leave a comment below. Subscribe to the channel. If you watch this on StockTwits or Twitter, give me a follow there. Leave a comment, and I will certainly get back to everyone. Again, have a profitable trading day. Be well.